So today we'll be talking about market analysis. So today is the third day on our intensive training. So let's go right into it. Market analysis. Market analysis in forex is the process of studying and evaluating the forex market to make informed trading decisions. It involves assessing various factors that influence currency price movement, including historical price data, economic indicators, and market sentiment. The goal is to predict future price trend and identify trading opportunities. So basically what this is saying is that we look at past price movements through maybe price data or economic indicators to be able to predict future price trends or movements so that we can be able to enter the trade, you understand, or identify trading opportunities. So types of trading analysis in forex: we have the technical analysis, we have the fundamental analysis, we have the sentiment analysis. So what is the technical analysis? Technical analysis focus on historical price data, charts, and patterns, and help trader determine entry and exit points based on market trends. So we look at what actually the chart is trying to tell us, you understand, whatever the data is trying to tell us, so we need to enter chart. So we can use many tools like support and resistance, candlestick pattern indicators. We'll be able to talk about this right, like after I explain this, we'll talk about that. So the fundamental analysis analyze how news and policies impact currency strength. It is ideal for understanding long-term price movements. So to be able to under fundamental analysis, through fundamental analysis, we can be able to know that okay, price is going to go like this because of news, like policies, implementations can be able to affect. You understand? Through news, we can be able to know okay, this is what price is going to do later, and it's actually for a long term. So sentiment analysis is about knowing the overall mood of the market. You understand? Risk on versus risk off sentiment. So there can be a particular, let me say they are talking about gold and people are like, like the overall market, like it's not news I say, like the overall sentiment of it, that you should risk it, gold is going to pump or something like that. You understand? So you check the overall mood. This one is not like as if you are analyzing how special individuals are behaving. So they analyze and sentiment analysis analyze traders' position and behavior through tools like commitment of trader (COT) reports. So that's how you can be able to use to know how they are behaving. However, I'm not talking about any of those two, fundamental and sentiment analysis. I'm talking majorly on technical analysis. So the first thing on our list is reading the charts. So how are we going to be reading the charts? There are different types of charts. We have the line, the bar, and the candlestick chart. Look at the line chart, which is the first one here. This one, you can see how it looks. It looks very interesting. Just lines moving. Yeah, and we have this. This is the bar chart. Look at how strange it is. You can just zoom in and look at how strange it is. How market is behaving. It's going up and down, but you can be able to see how very different market is. Yeah, so than this first one, the line chart. So, however, this is how the candlestick pattern looks like. It has more body, it has more information. Actually, that's the reason why we traders use this one, because it has more information. It tells us more about how price has moved, more than this bar chart. But all of them are good depending on you and what your preference is after you have already checked what you are going to be doing. So, now trend analysis: identify bullish, bearish or sideways market. How? What we are saying in trend analysis is how to know how a bullish market is. So if I come on now and tell you the market is bullish, the market is bearish, the market is sideways, what it means is in bullish means that it is an uptrend. So an uptrend comprises of highs and lows, as you can see here, highs and lows. Sideways market just has, though it has equal highs and lows, that's sideways. Why bearish trend, which is the downtrend, is lows and highs. Like, it's not like as if all of them don't have highs and lows. What I'm trying to say is, in an up in a bullish market, it means that it is going up, but it comprises of the highs and lows. In a sideways market, it is moving, having equal highs and equal lows, as you can see it in this place here, very equal, but it's moving in a sideways direction, not up, not down. But in a bearish market, it's going down. You understand? And still having this lower high and lower lows. It's comprised of lower highs and lower lows. Now we go to the support and resistance level. This is another tool to identify in in technical analysis. So what is support and resistance? Support and resistance levels are fundamental concepts in technical analysis. They represent price level where buying or selling pressure tend to dominate, preventing further movement in a specific direction. So we use this place to identify where price has stopped before. Yeah, technically, price has been moving in a particular direction before and then it stopped. So we identify that place as a support and resistance level. Now don't worry, we'll see it. Now what we mean further, like when we represent that place, it's more or less like as if when we identify that side, we can be able to use it as, since price did this historically, price might probably do that again. You understand? So we can be able to use it that once price gets to that area again, it's going to reverse. You get it. So the support level is a price level where market tends to stop falling and may reverse upward. You understand? So price is falling, that is this it here, and then you understand, this is where we've identified that price originally fell. So now when price is coming back, it may reverse upward in this place. You understand? So this place here is a support area. You understand? Resistance level, an area, a price a level where market tends to stop rising and may reverse downward, as you see. So that's what it is, and represent a concentration of selling interest or supply. What it means is price is going upward, then what will now happen? Since it stopped and went away and stop here, when price come in, it may reverse downward. Yeah, so that's it. So this is my chart that I've been using recently on volatility 150 1S. You'll be able to see this support and resistance. I say support and resistance, because this is the resistance here and this is the support here, this place here. How do I know this? You'll be able to see that price has been moving from this area here. Price came to this high here, that's this market here, this one here now. And okay, what I'm saying is that price will potentially do what it was rising around this place here and then stopped here in this place here, and then it went down. Understand? In fact, let's look at it from this point here. So price was going down. In fact, you can look at the down movements. Then it stopped and moved up. It moved up to this place here, and then stopped, and then went down back. So it's in price came to this area here, and then did what? It was potentially going up again. You understand? So look at it. Even though it did not completely reach that up, price still came to this place again, the same area again, and did what? A reverse again. Although it has been bouncing at that level at this zone here, then but when price came up again, you see, it still came back to this zone here, and then reverse. You see, it is still points down again, came down again to that side. So that's how we see support and resistance. That's support and resistance. So steps to identifying support and resistance. First of all, you examine your price charts. Look for areas where price reversed multiple times in the past. So you can see this first one here, this one here. Even if we don't even look at the bearish, this bullish one here, we can look at this one here. price reversed here first time, reversed here second time, reversed here third time. So you can just identify that here that price will definitely reach that side and do what, and come down and reverse from there. Second one is identify swing highs and lows. Supports are often near swing lows. Resistance is often found near swing highs. What we mean by swing is, see the price in this bullish trend. This move now, this small move that I see now, is what we call swing. So it's a swing high because it's going up, swing high. For this one now, this one is an uptrend. This is an uptrend. See, swing low, uptrend again, swing low. You understand? So basically, support as you heard is found at what? Basically, support is found at what? At swing lows. So that is like, although there is no example here, let me just give swing low for you. Like this now, this market is a swing low. Oh, mistake, swing. Sorry, this is it here. So this is a swing low. Look at the market came here now and it still came back to that same low again here. You see it now, even though it is a trending market. So that's how it is. And also resistance is found as swing highs. Although it was not given here, but you can no, it's actually here. You can see it here. This is a swing high, and then market came here again. So that's what we call. That's how support and resistance is found as swing highs and swing lows. Now, also for step again to identify it is draw horizontal lines. You can use a horizontal line on your chart. Yeah, that when we are opening the demo, I can be able to see, but we use the horizontal line. There's this type of line that is here. This line you are seeing here, you can use a very straight line to be able to move it and put it in that level. Me now, I use that box that you are seeing here. You are seeing something like a box, yellow box, yellowish in color. So that's how actually I majorly use my own rather than horizontal line, because I use it as a zone. Because you technically see that price did not necessarily reach the tip of this place, but it was like a zone. So that's basically how I do my own signal, the both of them. So that's how it is. It's water resistance. So the candlestick patterns. Candlestick patterns can be, this is the third market technical analysis strategy we can be talking about. So the candlestick patterns can be categorized into continuation, reversal, and indecision patterns based on the type of market signal they provide. Here's an overview. So we have, first of all, we have the continuation patterns, we have the reversal patterns, we have the indecision patterns. But first of all, the continuation patterns, this indicates that current trend is likely to continue. That is, if it is an uptrend, when you see that pattern, this continuation candlestick pattern, price will continue going up. Yeah, so that's why it's a continuation. So first of all, you see the rising tree method. How does it rising tree method look like? It looks like this. What do we mean by it looks like this? It first of all has a bullish candle, one. Then now has small candles. It may not be three, you understand, but it is small, very small. And then after it does that, one long candlestick will still form again. You understand? That's it. Although I did not tell you guys what a bullish candle. A bullish candle technically is represented by a blue candle, while a bearish candle is represented by a red candle. Or in some other charts, it can be white and black. So the black is represented by the bearish candle, meaning that it is going down, and the white is represented by the bullish, meaning that it's going up. So the green is technically saying I'm going up, the red is trying to say I'm going down. So let me remove all of that. And as I was saying, market is going upward. I mean the bullish market showed here. Look at it here. You can see that price is actually going high shows that same pattern here, then a three bearish candles, small ones, then a push up. So the moment that push go up, what you're supposed to be expecting is that price would just continue going up. So you can enter from there and just and the price will be going. So that's how a rising tree method is. The falling tree method is also almost also the same thing with the bearish. With the rising. The falling is that there is a bearish move. That means price went downward first, then small bullish move candles is three, probably three. Then there's now a long move of the bearish candle. Understand? So once you see that thing in any chart, once you see it, just know that your price wants to fall. Understand? So the reversal candle patterns, unlike unlike the continuation where it won't fall anywhere, the reversal candle patterns should not be done anywhere. It should be done at key levels, like the candles, like the support and resistance that I showed you. Yes, like at swing lows, at swing highs. Yeah, so basically it's done at key levels. Yeah, as I said, support and resistance is the key level, so that's it. And swing highs and swing lows, ranging markets, those type of things, you understand? So as I said, reversal pattern suggests a change in current price direction. So we have the bullish reversal pattern appearing in downtrend. So that means if there's a downtrend and then you see this bullish candle appear, what do you expect? You expect price to start going up. So this is it here. Price was originally coming down, and then this is the hammer. The hammer has a wick and then a fat body. Not really fat per se, but this is how a hammer look like. And then once you see the price and start forming a cell going up. So as I said, it is done at key levels. So let me say price was originally like this, and then price coming down. You know why I said that when I told you that support area can be made is that when it's getting there, you still have to look for candlestick patterns. That is this candlestick I'm showing you now. So if you now see that hammer at this point, I was telling you at key level, this is a key level. So you now see it here, you expect price to go down. So this is another confirmation that price is actually going to that area. So the bullish engulfing pattern is such that there is price was originally coming down, and there is a bearish candle that it went down. It was going down. You understand? Then there was now a bullish candle that now came up. You see that the bullish candle is bigger than this bearish candle. This bearish candle. Yeah, the bullish candle is bigger than it. So once it appears, what it means is that the bulls are that is the people that the bulls are in the market. That's the people that want to move the market to go up are in the market. So they are overwhelming. They are more than the bears in the market. The people that are selling in the market, you understand? So markets begins to go up. It is also done at key levels, not at any house zone. So we have the morning star. The morning star is represented by 3 candles, not 2. You understand? First of all, it has the bearish candle, which can be big or small, like it just anyhow, but it's a big body somehow. Then it has a plus kind of this thing, just like it can also be like hammer. And so it can also be hammer in fact, but it's a small stuff that like plus, and then we can call this a doji or a spinning top, but I'll talk about that later. After that, then there is another momentum. There's another bullish candle representing that I'm in the market. You understand? I'm in the market. So when these 3 candles come together, what it means is that price wants to reverse. The first, what it means originally was that originally the bears were in the market, they were strong, and then this now mean that I've lost strength. That is, the bears have lost strength. Now then this one now mean the bulls are in control. They are strong. The bears have lost strength. The bulls are in full control. So basically that's it, and then it will start going up. Yeah. So the bearish reversal is also similar to the other one. The shooting star is just the hammer, but in an inverse form. Once you see it as support zone or swing tops and swing lows, you know that price wants to reverse. If you see this bearish this thing, you see small this thing, and then a big body of bears at key levels here. Price wants to reverse. I'm rushing this because I want it to be short and concise so that you can be able to watch it over and over again, and it should be understandable. Understand? Yeah. So the evening star is just like the morning star. Same thing here. There was a bullish move, that is price was going up. Then that small candle representing that they no longer have strength, and then that bearish move down telling them that I am here. So the thing occurred as we see it here at what key level, support area, at the resistance area, and then because of that price started to go down. You see that? That's how it is. That's why to identify a reversal in the chart using the candlestick patterns, or to know when price want to reverse from uptrend to downtrend. So we have the indecision pattern. This occur when the market shows uncertainty about the next direction. So when you see this, you know that the market doesn't know actually where things going to. So like the first one is the doji. Look at the doji, looking at the plus, this long-legged doji, this one dragonfly doji, greystone doji, this 4p price doji. Basically what it means, it doesn't know what it's doing. So if you look at it in combination with those ones that I showed you before, what it just means is that at the beginning, let's just say I'm talking about the morning star. Let me go forward to look for the morning. Okay, let me just talk about the evening star. And now you look at this, you see that the bulls were in control first of all. Now after the bulls were in control, that candle is there. It's like the doji. So it now means that nobody knows what wants to happen. No? The market is trying to say, I don't know what is happening. Then the bears now come in. I want to tell you that when you are seeing this pattern, when you see the indecision candle, don't enter the trade yet. Wait for the next candle. So once the next candle closes, you know whether the bulls are in control or the bears are in control. So now you see that the bears now close at this place here. Now closed it. That is telling them that okay, we did not know what we wanted to do originally from this one here, but this second candle is telling us that this one here, this third one, this bearish candle is telling us that okay, now market have decided, and as what it has decided is that it wants to reverse. It wants to go in the bearish direction. So that's basically what it is. Another pattern is the spinning top pattern. It looks like the doji, just that it has more body. So that's basically everything about that. I don't really need to be explaining much. The indicators, we have the moving average, we have the RSI, we have the MACD. Moving average, you can go. The moving average is the SMA, the EMA, and their crossover strategy. So you can go learn them on YouTube if you are interested in it. But I don't think you need them, because through looking at the charts that I said, through technical analysis, you already know how to identify trend already. Like this RSI is saying identify overbought or oversold. What it means by overbought is that price has already bought to some extent, that it has gone long to some extent. So you want to identify where the thing has gone long to some extent and it's time for it to reverse. Do you understand? But you don't need that. You already have the candlestick candlestick patterns with you and trend direction. So that's just basically what you need. Have a nice day.